In this video, traders, we're going to look at 7 steps to bouncing back after a hefty trading loss. Stay tuned. Hey traders, a very warm welcome to you. Okay, so often as traders, we're going to have that brutal loss that is devastating to us. Maybe it's not that much financially size, but it's devastating. It puts us back several days, several weeks. Maybe it is a large size. Maybe it is catastrophic. Any of the scales, it doesn't matter. The important point is it's a loss that hurts. It's a loss that we didn't want to take. It's a loss that we shouldn't have taken, but we need to take some action. All right, step number 1, the first thing first before any of this stuff is to stop trading immediately. Honestly, guys, just stop. Do not dig yourself a hole. If you're watching this because you've suffered a loss and maybe you've Googled it and you're new here, then the first thing I want you to do is just to pause the video. I don't care about you finishing the video. Go and just stop trading. Close your positions, close the position that's devastating, whatever it is, close down your broker account. Don't give yourself that reason to trade. Make it hard for you to trade. If your exited your positions, good, then make it hard for you to trade. Shut down everything you need to, your broker account, whatever. Even shut down your computer if you're watching this on a computer and go and carry on watching this on a mobile. Just keep yourself from pulling the trigger again because you're in the complete wrong frame of mind. It doesn't matter how successful you've been, how much of a great trader you are now using a different side of your mind to trade, which will never ever give you the results you want. So stop trading immediately, number 1, before we even continue. Welcome back if you're back and you've paused it and you haven't stopped trading, but if you're still here, let's go number 2. Number 2, take a break. It's the last thing you want to do, I know. You've taken a heavy loss and all you want to do is trade to get yourself back to where you were because you think that if you get yourself back to where you were and you trade back against the loss, you'll feel great about yourself. You'll be back on the game. It will undo the mistake. You won't feel so bad. So not only have you got a desire to get the money back because financially you want to have the reward, but you also want to feel better in yourself by getting yourself back to where you were before. So there's a massive desire to actually trade. But as we said before with number 1, you're not in the right frame of mind. You need to take a break and you need to say to yourself, how long am I going to take a break for? And stick to it. You know, when you say something, you stick to it. Say, I'm going to take a break for a week. I'm going to take a break for 1 day, a month, whatever it may be. It's all relative to the loss, obviously. But once you say to it, then stick to it and it will be a good thing for you. You'll come back better, refreshed, clarity, and you'll have a way better chance of recovering that loss and not doing any more damage. Many people, guys, have a big trading loss. They stop trading or they come back or they don't stop trading enough and they just do more and more damage. And that was the catalyst for a complete blow up. It may not be a blow up trade, but it was a catalyst for a sequence of trades afterwards that were based on trying to get that back that caused a catastrophic failure and a catastrophic blow up of an account. So that's what we're trying to avoid here. The loss has happened. You can't change it. Deal with it. Number 3, accept responsibility. Deal with it and accept responsibility for it. The most important thing is you're not doing any more damage for it. We're going to review in a second, but this is the first thing. Damage limitation. Stop trading. Take a break. Don't do anything more. And then start to accept responsibility. Yeah, but it was my broker. You know, my broker wouldn't let me get out. Oh, but it was my technology. Oh, but it was this, I didn't do this, I didn't do that, I got distracted. It doesn't matter, I don't care. The point is, the point is you need to accept responsibility. Whatever happened, it's something that you can control and something that you know could happen. And so this needs to be full accountability and responsibility for it. Once you've done that, we can move forward. Next thing is number 4, realigning your focus on what you've been doing right. So rather than dwelling in the negativity of the loss and I've done so badly and it's pulled me back by months, it's pulled me back by whatever it may be. Oh my gosh, realign it. You've accepted responsibility for it. It is what it is. You've stopped trading now. You can say, hey, what have I been doing right up till then? Even if it's something small, like, hey, you know what? I've been very disciplined with my strategy, creation, with my day-to-day planning and preparation. I've been very good at this and very good at, even if it's not specifically performance related, it doesn't matter. I've been taking this seriously. I've been evaluating. I've been journaling well, whatever. Just grab yourself something positive to build on because that's going to change the way you think about it and it's going to allow you to get back from the loss quicker. All right. Number 5, guys, devise a plan and goal to not repeat the process. This is going to be the losses. We've done videos before and go check them out on kind of what's caused the loss and how to actually do this and come up with a plan. But what you now want to do is put stuff in place that makes this makes it less likely to happen in the future. Some kind of catalyst has triggered you, some kind of reason this has caused a loss for you. The point is, I mean, go and check out the video, it goes in much more detail, but the plan of how you move forward is important, so you don't just brush it off, you don't just do all these good things and then repeat the process another few weeks down the line, repeat the process another few weeks down the line. You need to be making incremental improvements and at least learn from this kind of stuff. All right, number 6. Once you've done that, once you've accepted your responsibility, once you've got a plan in place, once you've taken your break and it's time to get back into it, go onto a paper trade or demo. Now, you could skip this if the loss wasn't brutal. Fine, go back into real money with small size, but this might be an intermediate step that you want to do just to get yourself back in tune with the market. You know, just say, hey, paper trade for a little bit, watch the market for a bit, demo. You don't have to trade literally on a demo on a paper, but just watch the market for a bit. Get yourself back into the feel of it. You've been away for a few days, hopefully you've taken a break. You're going to come back in. You're not going to be in tune with what's happening. You don't know what's going on. You're probably a little bit unaware of what the levels are, what the market ranges are, all the kind of stuff that you take for granted when you're in it every day or every week, whatever you're swing trading. So just look and observe for a while. You don't have to paper trade or demo, but just observation will do. And then when you go live trade, don't go straight back into full size. Just start small. Get the confidence up. You want to get your confidence up. You want to put your loss behind you. You want to do everything that you can to try and start afresh. You won't forget you're working towards your goal of not repeating the process. So that should be implemented in your trading plan. But starting small, because the last thing you want to do, you're delicately back to where you were now. Don't forget, it's like when you've been ill and you come back up and you're like, oh, I feel a little bit, I'm not feeling quite perfect. And it's not going to take much to knock you down again. Same thing with this. You don't want to come back in and be trading full size, have 3 big losers in a row that are just literally going to be like a hefty right hook across your face when you've just got up. That's the last thing you need. If you do some damage, it's going to be limited and you're going to say, hey, you know what, I'm out of tune with it. Doesn't matter, it's very, very small size. I can reassess. It allows you to get back into the groove. Once you're back into the groove, once you get the feeling for it, once your setups are working, once you get in the market conditions going, once you feel comfortable with taking losers, taking winners, running winners, all the stuff that you do, then you can go back to your full size, back to where you were with the extra thing of, hey, I'm not going to do it again because I have a plan in place to stop me having those big trading losses. All right, guys, take care. Keep the risk manageable, whatever you're doing. Try not to get yourself into that situation in the first place. But if you do, 7 steps to hopefully get yourself out of it, recover, get back up above that high watermark in your account and keep moving forward. Take care. Thumbs up, all that kind of stuff. Thank you. Bye-bye.